Hey everyone, and welcome back. We've got some huge news from the gold market today, and trust me, you're going to want to hear this. Gold prices just hit new highs, soaring past $3,450 an ounce for the first time since July. We're talking about a metal that's up over 28% this year alone. So, why is this happening? And more importantly, what does it mean for your investments? Let's break it down. So, why is gold shining so bright right now? Well, it all comes down to a few key factors that are making investors flock to this precious metal. First up, the U.S. jobs market is showing some serious weakness. Recent data revealed fewer jobs added in July than expected, and even worse, previous month's job numbers were revised significantly lower. We're talking about initial jobless claims jumping to over 225,000 and continuing claims hitting a level not seen in years, nearly 2 million. This kind of sluggishness in the labor market, it often signals slower economic growth ahead. And that's exactly when gold typically becomes a safe haven. The second massive driver is the Federal Reserve's interest rate policy. With all this weak economic data, expectations are sky high for the Fed to cut interest rates very soon. Traders are now betting on about a 90% chance of a quarter-point rate cut as early as September. Remember, gold doesn't pay interest like bonds or savings accounts. So when interest rates are low, holding gold becomes much more attractive. Some Fed officials are even publicly supporting rate cuts, saying the economy is slowing and they can't wait to adjust rates. This shift towards easier money policy, it's a huge tailwind for gold. Now, let's talk about something a bit more controversial, President Trump's new tariffs. These sweeping tariffs, ranging from 10% to 50%, have officially gone into effect, targeting dozens of countries, including a 100% tariff on imported semiconductors, unless they're made in the U.S. India, for instance, is facing a 50% tariff on certain exports, all because of its continued oil purchases from Russia. These aggressive trade moves are sparking global concerns about a new wave of protectionism and potential disruptions to supply chains, which historically boosts gold's appeal as a safe haven asset. It's interesting to note that while gold is soaring, the U.S. dollar and treasury yields have also ticked higher. Now, that can be puzzling because a stronger dollar usually slows gold's momentum. However, the uncertainty created by these mixed signals and the broader economic turbulence is keeping gold right in the spotlight. And it's not just individual investors buying gold. Central banks around the world are significantly increasing their gold reserves. Take China, for example. They've been adding to their gold holdings for 9 months straight. Just in July, they added nearly 2 tons, bringing their total to a new record, over 2,300 tons. That shows a deliberate strategy to diversify away from the US dollar and prepare for global instability. This kind of robust institutional demand creates a strong foundation for gold prices, even during minor pullbacks. So, what's next for gold? Experts say the primary trend has been bullish since late 2023. Gold prices closed at new records in June, which is a technical sign that the bullish trend is holding strong, even if the momentum is fading just a bit. Let's talk numbers. Gold futures recently settled just below near-term resistance at $3,450. Key resistance levels to watch are around $3,440, $3,470, and $3,510. Breaking above these could open the door for a run toward $3,500 and beyond. In fact, gold already briefly pierced the $3,500 level this week, with futures hitting $3,534. Analysts predict gold could hit a new record in the next 3 months, potentially reaching a range of $3,300 to $3,600 an ounce, with a near-term forecast of $3,500. Looking further out, analysts expect the bullish trend to continue through 2026, with an average price of $3,475 an ounce projected for that year. Some even talk about targets as high as $3,800. Now, what about support levels? These are crucial for understanding potential pullbacks. Important near-term support is around $3,325 to $3,330. Other key support levels are $3,328, $3,284, and $3,181. If gold drops below about $3,380, it might head toward $3,350. A break below $3,320 could signal a slide toward $3,120. The general sentiment among analysts: buy gold on every dip because the overall trend remains strongly bullish. So if prices fall temporarily, that could actually be a buying opportunity. The market is currently consolidating around current levels, and a breakout is expected to provide clear direction. It's clear that while we might see some bumpy rides ahead, thanks to mixed signals, the underlying economic uncertainty, tariff tensions, and the high likelihood of Fed rate cuts are creating a very strong, long-term bullish outlook for gold. So, that's the latest on gold, and honestly, it's looking pretty golden for the foreseeable future. Remember, staying informed is key in these markets. If you found this breakdown helpful, hit that like button, subscribe to the channel for more market updates, and ring the notification bell so you don't miss out on our next video. We'll keep you updated on everything you need to know to navigate these exciting times.